Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, click on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber.
Tuesday, August 16th, 1:35 p.m. New York time. Day trading, scalping, swing trading, investing. Yep. So if you hear the word scalping, it's still considered day trading. It just means that you're in a position for a smaller period of time. Might be a few seconds, might be a few minutes. I'm gonna look at day trading, but first I want to do a top down because we're gonna look at the S&P 500. That's the main go-to product. I day trade and I swing trade and I scalp. It's important to know. To me, I believe it's important. I understand it's important to look at multiple time frames to know the situation. Looking at the monthly on the SPX, that's the cash index of the S&P 500. It's green for the month, higher high, higher low, trading above this consolidation phase. And look what we're coming into, midpoint of this big monthly candle. Just by looking at that, what does it interpret to you? What might that mean to you? You know, is it a ceiling, a resistance area? What might occur when prices go there? Situation awareness. Go on to the weekly time frame now. So it's Taco Tuesday, but already it's green, higher high, higher low. The trend is up. Again, we have a big supply zone up here on the weekly. It may break through there, may pause through there, and may reverse through there. Don't know what's going to happen, but I'm prepared for it because I'm aware of the situation up here. That in the past, it was a huge sell-off. Yep. A lot of selling up there. Looking at the daily chart. Green for the month, green for the day, higher high, higher low. Breaking through this big number, 4,300, and also above the supply zone where sellers were. Where did that occur? What made that? Unzoom, look here. So all the way back here, several months ago, we had a consolidation phase and a breakdown lower low. So up here, at the top of here, tested this twice. Zoom in some more. Selling occurred up there. So now we're finally the highs. We're already trading above the high and we're bullish. But again, now we're coming midpoint. See this big red candle on a daily? I labeled the midpoint there. I'm going to zoom in. So I'm aware that we could go up here today. Yeah, we could go up here today. And then that's where we might have a fast sell-off. So swing trading, I'll be cautious of putting new trades up here on the bullish side. I'll be maybe looking towards doing bearish trades for swing trades. But for day trading, I'm fine because I'm not staying in it overnight. I can trade either direction. Now we're looking at the ES, which is the futures S&P 500, and I trade options on those too. Look at this. Each of these are 4 hours, 4-hour candles. So the current candle started at 1 p.m. and it gets done at 5 p.m. So it's already took out the high of that prior 4-hour candle. Yesterday, big impulse move up, overnight consolidation. And today we broke above supply zone. And now the new candle broke above. Maybe you go to 43.25. I'm also aware of these midpoints below. Look at that. Okay, right there, it tested it today. The 1 hour. We'll see that on momentarily. Now we'll look at the 2 hour candles. Yeah. So notice this on this retracement. Zoom in. This retracement that occurred. Went right to the midpoint of this 1 hour. Yeah, we're looking at a 2 hour chart, but I drew this on the 1 hour, touched it, and reversed. So here we go on the 1 hour. This huge candle occurred on the 1 hour, I drew the midpoint. And if a retesters come back down there, that's where I would consider doing a trade, one direction or the other. Well, I happen to not been here. I'm not going to stay in front of a computer 24/7. I have certain times for my primary trading hours, but I'm back now, and I typically look to do some trades sometimes around 2:30 till the end of the day, till the market closes at 4. But I missed that one. That would have been a good one, and I could have either outright bought the stock, S&P 500, the stock ETF SPY, or bought the futures contract on the ES or the micro ES. As well as could have bought call options or done bull put spreads. These are a bunch of strategies that I could have done. And if I did, well, then they would have been profitable. Probably would have closed them already, took my profits. Yep. And all this would get updated after the market closes today because some of these things are no longer valid. Well, let's go forward a little bit more. 30-minute, 5-minute. We're looking here on the 1 hour, looking for several days now. So each of these is 1 hour. So this was Friday. I wanted to include that past Friday. And I did trades overnight also in the ES. Day trades using options, credit spreads that expire the same day or the next day. So here, this was Sunday night. This horizontal vertical area, Sunday night. This was the regular trading hours, Monday. This was last night. This is the regular trading hours. So I'll show you what I did. Yep. And the market opens at 8 p.m. because the Asian session, the Tokyo session, opens at 8 p.m. New York time. Again, that won't be valid anymore when we change our clocks. When we roll our clocks back an hour, that will change. Not the Tokyo stock exchange. No, for our time, most day traders that trade overnight have been finding out for years are not situation aware of that. Yeah. So my understanding is a lot of them think that if we change our clock, they change their clock. No, everybody. Everything does not roll around the United States. That's okay. It's their problem. They're the ones making mistakes because they didn't do their due diligence. But going forward, Sunday night, I was leaning more bullish and I was waiting for the pullback. So we opened up, we pulled back, did my trade here, got in early. Shame on me because I didn't know that we're going to have a further decline down. And we did. Lower. And then all of a sudden I had this huge impulse move up. My trade got closed of 50% profits. It was a credit spread using options on the ES. Again, you could do these overnights. Yep. So if I did this side, anything up here, bear call spreads, well, that position would have got closed sooner instead of waiting out. And then I could have done a new one. Yep. So here it is. As soon as I put trades on and positions get filled, I immediately put working orders on to close them, typically around 50%. Yep. And certain times I'll adjust that throughout the day. Often I do. Might adjust it to get out sooner or to take more profits. So here, last night, I did this bearish trade. I was still bullish the market, but I saw a decline. We were selling off. So I did a bear call spread. Yep, went lower. And then all of a sudden, around this time frame, not necessarily the 1 hour candles, I was looking at multiple time frames, I started seeing buyers step in. I was like, I might have been wrong, but I like the bullish side on here, but I wasn't ready to close my bearish side, so I added the other side. Yeah, you can have multiple sides. So I was trading with a bear call spread up here, entered the bull call spread here, and then they both got closed, not too far apart from each other, maybe a few minutes between. But anyway, I adjusted them. Yep, I took in more money. Made more money. So I had them working to close 50% profits, but I liked how things were going. And I decided to staying longer. So I made more than 50% on each side, more. I think I took like 80% on one side, maybe 70% on the other side. That's adjusting, but again, kept the working orders. And if I felt that things were going to come more riskier on one side, I would have adjusted them, which you could, not a problem. Yeah, they were set to expire today at 5 p.m., but I'm not staying in until 5 p.m. I don't mind reloading new trades. And around 2 o'clock, 2:30, I might put on more trades today. So let's look at here. These are trades I typically put on in the afternoon or sometimes after 8 a.m. in the morning. So now we're looking at 30-minute candles. Again, we're looking at several days. This just happens to be past Friday. Same thing, S&P 500 futures. And sometimes I'll use these instead of the SPX. So here, yesterday, I was bearish and I put a bear call spread on here. And yeah, it went higher against me when I did that trade on here. It went higher against me. But then when we had this fast sell-off, it sucked the premium out of there because you're doing credit spreads, which is to collect the premium. You're not buying the credit. Sorry, you're not buying as a debit. You're collecting as a credit. And the premium melted away real fast when the market went down because it's closed for a gain. Very nice. Very nice. You can do this again, like I mentioned on the SPX. And I was concerned of doing one down here because they weren't paying that well. And I was thinking, yeah, we're overextended for the day. I think there was a higher risk that we might pull back when I saw this. So that's why I didn't want to do this side. Sure, in hindsight, I could have done both sides. But again, in hindsight, it would have been better. Yeah, if I did this trade on this side, would have got out sooner. Still worked out. So now, look at this. We're still crawling up higher. I'm going to be, after I get done with this video, I'm going to decide, do I want to do a trade? The ones that were expired today, 0 DTE. Doesn't matter. You can use any financial instrument you want, but I'm trading the S&P 500. I may do the SPX. I may do the ES. Now we got this breaking up out of this consolidation area. So I have to see where what I'm going to view interpretation of the charts. But anyway, that's what we're looking for. Maybe won't do nothing. We'll find out. But there are opportunities. So let's take this up and look at the time frame real fast to get interpretation. We're going to look at the 4-hour. Yep. So the 4-hour, just to identify, look, the 4-hour is bullish, trending higher, high. Not much of a resistance overhead. The 30-minute, again, the trend is continuing. The 1-hour, yep, yeah, nice demand zone over here, buyers. So maybe I should look for putting something below that. Just hypothetically, look, 33.10, 33.10. I'd rather be below what we broke above, 4,300. So how would one do this? Look at trade. Today's options expires today, C0. Open that up. Give you some more real estate. Close that up. Again, looking at this as a bullish. So again, I want to identify that strike, 4,300. So I'm looking 4,300. Looking at that strike, there we go, 4,300. Let's verify. Yeah. So again, that was a key level, big round number, 4,300. If I put the trade on below there, maybe I'm lower. Yeah, you are lower risk, obviously. If I put the trade strike closer over here, I am adding risk, but I'm collecting more money. I'd rather be lower, reduce risk. So looking for strikes below 4,300. 4,300. There we go. And that delta's 8. Nice. So let's see what kind of premiums collected. Credit spread. And I want to go wider than that. So the long strike, I'm going to go further away. There we go. So understand that 4,300 minus 4,285, that's 15 points wide. 15 points wide. Say that again, kids. And that is 3 strikes wide. Yeah. 4,300. Another strike, another strike, another strike. So 1, 2, 3 strikes wide, 15 points. And I'm only going to collect 30 or $35. Or not really $35 because that's the futures. So you got to do the math there. Got to do the math there. Multiply it by 50. Anyway, that's not enough. I like to collect more than that. How much would I like to collect? Well, more than that. So clear this out. And I'll be looking at the chart, deciding where do I want to take risk. Well, here, again, what's the low of that candle? Because again, this is demand zone, buyers demand. What's the low of that candle? 43.06. Let's go look at 30 minutes. Zoom in, 30 minutes. Again, nice demand zone over there. Let's take it 15 minutes. Yep, so pretty much a big consolidation over here. So instead of below that 4,300, I'll look for something around here. So 43, let's take that to below that 43.05 below it. Yep, so oops, let's adjust this. 43.05. Same thing, we're going to go wider. Oops. Gotta go wider. So scroll up, or actually scroll down. Let's go 42.90. There we go. 43.05, 42.90, 75. That's better. Yep. So I'm taking the risk up, which is a 15 delta, which is still below 16 derivation. So maybe I'll do that one. 43.05, shorting 43.05, buying 42.90, collect 75 premium, and then bump this up to the number of contracts I want to do on each side. Again, 43.05. So when you come back and look at this video, identify between now and 5 p.m. If we stay above that, well, we stay above that, then I would have done max, kept all that money. But again, I'll be working on an order not to stay in the whole time, take some profits. Many thanks for watching.